Ladies and gentlemen, I welcome you all to the H2 and FY25 post-earnings conference call of Interiors and More Limited. Today, on the call from the management, we have with us Mr. Manish Tibrewal, Managing Director, and Mr. Rahul Jhunjhunwala, Executive Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to run us through the investor presentation with business and performance highlights for the period ended 31st March 2025, the growth plan and vision for the coming year, post which we will open the floor for Q&A. Over to you, Manish.
Hi, good afternoon, everybody. This is Manish Tibrewal. I'll start with my qualification and some experience, and then I'll take you through this PPT. I've done CA, I've done law, I've done CISA, ISA, and I worked for IDBI around 4 years, Citibank around 3 years, and Fullerton India around 3 years. Then after we started this company in Interiors and More in 2012. And we'll go through PPTs better. Yeah, we can stay here. So we started with a very small area of around 5,000 square feet in 2012. Then we started adding more and more products, more and more SKUs, more and more areas to cater. And we started opening our showrooms also. So like 2012, we started with one store around 2,000 SKUs, and then we started adding more and more SKUs. By 2016, we got one very good area, which is wedding industry. And we have started getting into more and more products related to wedding and decor industry. Before that, we were doing home decor, office decor, and other decor related materials, plus floral shop supplies also. Now we have showrooms. Main showroom is in Bombay, Fort area, which is around 10,000 square feet area, which is kind of experience center where we displayed all our products. And last 2023, we opened Dubai also. Dubai we opened to cater Middle East and few African countries, which we can cater from Dubai. We wanted to get into export. We wanted to have our overseas presence. That's how we started this showroom to cater to our export plans. Last year, Pune also we opened. Pune we opened this year. It's our branch to cater to all this area, non-Mumbai related Maharashtrian areas. And the growth and the requirement is very high in that area. So we thought it's good to have presence in that area. So we started Pune, which is doing B2B as well as B2C, both retail and wholesale. Both is we are catering from this store. This is our branch. Jaipur we started as a franchisee, B2B franchisee. B2B franchisee is like we sell wedding related products, which is purchased by the decorator, event people, and even the wholesalers also. This we started B2B recently. We started B2B to decentralize our sale and to add more growth to our top line, which can happen only through the local support, which these stores are doing. So we have less concentration or burden in our centralized process. At the same time, we get more and more response from local presence. So we started Jaipur, Hyderabad also we started, which is around 7th floor building, and which is doing more for wedding related products and retail also. We have plans to open more stores B2B this year, which can cater to regional requirements, and we'll get into B2C also. We have signed a franchise agreement, Franchisee India, for the B2C segment. So maybe coming year we can open 10 to 20 B2C store, and B2B also would be around 10-15 stores pan India. Factory, we set up factory like I'll give you some story behind this. So 2016 we started. We were importing from Thailand, China, Vietnam, Philippines that time, and the requirement is very huge. So we are not able to cater to the increased demand. So we thought of doing manufacturing at our own. So 2018 we started with 2-3 machines in our Vivanday warehouse, and then demand was good. So we post Corona, even requirement was very high. So we set up full-fledged factory in Umargaon, Gujarat, 2021, around total around 80,000 square feet. And we started manufacturing goods. So last year it was around 32% of the total goods we procure or made. And this year maybe it's going to be high. Idea again is to replace all the import purchase by our own manufacturing, which we can achieve to a great extent by 2000, by next 4 5 years. Sales office, we have sales office in Delhi as well, which cater to North India, because people can come, they can see, they can deal with them. And we have warehouse in Bhiwandi, which is around 57,000 square feet. Pune also we have a warehouse which is 25,000 square feet. Central warehouse is again Bhiwandi. Plus we have big warehouse in our factory area also, because whatever we produce, whatever is required to hold for the season period, we store over there. Dubai is also supported by a 12,000 square feet showroom, which is big enough. Height is also very good. Product wise, like SKU, we have increased. We are increasing since 2012. Now we have reached around 8,700 products. Also around 4,500 products we have reached in all 13 years of our experience. Overall square foot size is also increasing day by day. Now we are adding these franchises, these stores, and then big factory. So that is also adding up to more square feet areas. Clients, yes, we have more of repeat clients who keep on buying with us, and plus we keep on adding more and more clients through our exhibitions, through our publicity, through our promotion, through online, through our customers, existing customers also. So now we have reached around 11,000 clients. This is team. Manish Tibrewal, myself, I'm there involved since day one. This company was formed. Mr. Rahul is CFO now. He's also there. Ekta is also a co-founder, and she started with me from the time we formed the company. Rajat had joined not recently, it's been a few years, and he's also a very dynamic person, you can see. In fact, we are supported by very good independent directors also. Both of them are very qualified and very helpful. This year journey, as I said, 2012 we started, and then with 2000 SKU in 2013 we started adding more and more SKU. 2000, in fact, 2016, before production, we started assembling. Like we were getting finished goods before, then later we started getting parts and assembling here in India, and that's how we got into production. So now those parts, most of them we produce here in India, and then we get into finished goods. Required machineries are there. Machinery we mostly we buy from India. If something is required to be imported, we import also. 2025 is eventful for our interiors and more. We opened two franchises, one own outlet, and we are doing good this year. We are adding more this SKUs. Even we are expanding our manufacturing capacity. We'll discuss in next slides. For promotion, UAE also we keep on participating. India, we keep on participating in various exhibitions, very promotional activities across India, which can support centralized sale as well as regional sales, which we are opening our stores. And UAE also we participate in this exotic wedding planning and few more. This is like to we are placed here to discuss. So there we get lots of reference, lots of clients all across UAE. They come there, they discuss the requirement, that the conference is there, they discuss the innovation, the new things, and then we get good hold of customers. Ambiente 2025, this is in February, Frankfurt, Germany. This is the platform for more of home decor and other event and other decors also. This is global platform where all the people across the world, they come to this fair to explore the new products, to explore the new suppliers, new ventures. So we participated first time here, and we got very good response. We got a few orders also and lots of leads. I think next slides we can discuss that. So these are the ways we promote ourselves. Now we are doing good on e-commerce. Before, like few years back, we were hardly doing anything. Now we are listed on these platforms. Like for example, Meso, we are getting around 200 orders. So now we have a team which is focused only for e-commerce. So maybe coming year, we can see a tremendous growth in this e-commerce platforms and sales we get from there. We can go to next slide. Like I discussed that production, we are increasing our production, in-house production, which is INM India, made by INM India and the made in India products, and which was 38%. 30, so this is for revenue product. So we were there last year 32%. Now we are increasing. And what we are doing, we are trying to replace the products also. We are making our own products, which are very unique across the globe. Even China is not having those products, and we are making price competitive also. Now, world is open to buy products from non-Chinese country, and we are getting advantage of that. So we try around approximately 20% our own product, which we develop every year, and we replace imported products. And the export, what we are doing, we are trying our best to only export goods made in India, which is made by us, made in India. Those only we are exporting. We are not doing import and then export of goods. So we are promoting our own made in India goods for the export. Germany, the Germany fair also, we took all our INM made products, and the response was very good. Even few Indian buyers like Home Center, they were very happy to see Indian company being over there and making good products. They gave us a good leads, and they sent samples also to work out. So we are doing very good. We are getting very good response from this these platforms. We deal in artificial flowers, which is main category. Then we have artificial greens, vertical walls, decorative items, furnitures, fixtures, props, all related to wedding, mostly wedding, and then home decor, office decor, other events. So it's all decor items we deal in, and we are adding more and more categories also as per requirement, which is very easy to cross sell the product. We have existing customers, so we need to add innovative product, price competitive product, and then we add. So artificial fly is the main category, but these all other categories also taking good percentage in all product mix. These are manufacturing numbers. We started with small factory, then we added one more factory, and then these are number. The units in terms of numbers are very big. You will see this is going to 720 million and all. But the product, the parts could be very small, very small. Like one small flower can have 10, 20 parts. So that's why these numbers are high. But in terms of percentage, this is good, and we are trying. Now this unit 3, we have created our own factory, which is owned by INM, and there we are shifting both of these existing units. And so the new unit is called Unit 2. So this is combination of both the units we are doing plus the addition we are doing. We have done. And the next year we also see good numbers by increasing the number of machines, the space we have already increased. So we can see this good numbers. FY26 we can see 21.87 million as compared to 1062 now, and 26 maybe the 3125 million. This is the plastic product, the artificial flowers also we can see good growth from 23 to 47 and 67. So manufacturing is giving us huge benefit in terms of margin, in terms of product control, in terms of inventory. So we're getting all kind of benefits from manufacturing. It's not like for any imported products we need to order 3 months, 4 months in advance. Any quick requirement we cannot do, but by manufacturing, any quick or urgent requirement also we fulfill. So we are customers are also getting more comfortable because they are getting unique product at required time. So we are able to fulfill the demands. So the manufacturing is not only giving us the products or replacing the product, but giving us extra advantage to fulfill the immediate requirement of the customers, because our industry is not very matured in terms of the requirement, this, that. So the customers also don't know what they need, when they need. So we get advantage due to our own production. We can put all the machinery for those urgent requirement, and we get advantage, and customers are also very happy. Go to next slide. This is our showroom, which is there in Fort, which is 10,000 square feet. I'll request all of you to, whenever you get time, you can visit and you can see the product. What happened mostly of the flowers and the flower industry, hardly people knows that this could be as big. And I have few stories also we can discuss later. But I'll say if you see the product, you see the setup, then you realize what kind of industry and what kind of growth can be there in this industry. So this is our showroom is one of the example where we have displayed only the product, only for the display. We don't sell from here. We just take order, and this dispatch is happening from warehouse. This is Dubai. Dubai again, as I said, just to uh, make people understand our product, our policies, our the product quality, product price. We have the display center where people come and they see. And once they have seen the product, once they have seen the showroom, is fine. They can be in touch over WhatsApp, mail, or telephonic order. But we insist at least sometime they should come and visit. That's why we have regional or country-wise presence. Even being present in Germany, that Frankfurt fair, that people come, they can see the product, they can see the quality. So that's how we have with Dubai showroom. And Jaipur, we opened. Jaipur is again for the local regional requirement, the people who are local. Sometimes small order, they don't come to Bombay or Delhi, the bigger place, but locally they are happy to be catered locally. So we have the Jaipur showroom. This Pune showroom and Hyderabad showroom, this is almost similar patterns. Pune is a very huge demand from rest of the Maharashtra, and Pune is good hub and supported by all those areas near Pune. So this showroom is also five storage showroom where we are catering retail as well as wholesale requirements of that area. We supported the showroom by taking big warehouse, so we can cater the immediate requirement of customers or the orders we can supply from there. This will reduce the load of centralized supply as well, because we will have regional or local level warehouse, since we can supply from there. Hyderabad is very good. Even he was our customers. He was our old customer who got converted into our franchisee by seeing our policies, processes, our growth, our products. They were happy to convert themselves from the normal customer to franchisee. And this is also, I think, the seven-story building, and each floor is around 3,000 carpet area. So that is also very good too. Plus the owner and the are very experienced one. They are adding more value to our regional requirements. These are the again exhibitions. This is like Germany and this is EWPC UAE. So we keep on doing something. These are just example we have inserted here. It's not all we have done this only. We keep on doing. We keep on doing this to increase our top line, to increase our promotion level, to increase our branding, to increase our presence. So this results in everything all together. It's not only sales, everything. Maybe we generate leads through this, which leads can be converted down the line, 2 months, 3 months, 1 year, 2 years. So we get all kind of benefit from this kind of presence. Ambient next year also we are participating again in February, where we are expecting more good response. We have these clients, domestic, including Reliance, PNG, Rustomji, Interflora, Swastik. Like Swastik is into cereal production, and Interflora is into wedding and event decor. So we have all kind of event retail also. We have clients. So which makes us puts us at very good level, where we can sell all kind of products, retail, wholesale, and event related, all kind of product and all kind of client we have. So this gives us very good mix into our whole top line and whole growth part. This we got through our UAE and that Germany exhibition. As I said, we have already got confirmed orders, and we've got the advance also from the Denmark Jada Group and this Resorte Portugal, and few others are also there in lead. Even Walmart also Walmart US visited our stall in Germany, and they have also shown interest in 2 3 products, which we are still working on that. Oh, yes. This is our expected growth level, but as you see numbers, we'll discuss number in next slide. But if you see number last year, the top line was 32, and this year top line is 59. So we have grown by almost 80%, 90%. So that number we'll see, but yes, but in future also, we can go back to the same CAGR slide. Yes. So in future also we plan these numbers, but we try our best to achieve more and more number. In this 25-26 also, we are increasing our capacity, we are increasing our production level, we are increasing our machineries level, the space level. So growth could be more, but we as of now we cannot justify or the fix the number of that growth. So we maintain that at least will reach this numbers. And but yes, we are trying our best to make it double, make it triple, whatever best and maximum possible. We are putting all kind of efforts to get better numbers. Yes. Last year top line was 32. This year is 59. PAT is almost same, but in terms of number, it was 18. This 12. PAT was 8 last year. This year 12, and the percentage is little lower side. But you see like the extent of growth is there, so we cannot expect the same number of percentage in terms of PAT or ROI, because once the growth is so huge, we have to somewhere share the margin levels. So PAT percentage is little down as compared to 24.8 last year. This year 22, but it's 20.24% is there. But you see the numbers which are almost 50% more than last year. So we cannot say we can maintain the PAT level, but yes, overall the numbers would be obviously better year to year, because we are doing good and we keep on achieving more and more higher numbers. So that's how we are growing on numbers. Industry, we all know wedding industry is doing very, very good from all platforms. Even Modi ji said कि now we should do more and more domestic wedding, we should not go out. So that is helping more in terms of growth of everything related to wedding. It's not only floral or decor part, everything related to wedding is getting developed. High demand is there. The destination weddings are there in within India and outside India also. There are many people comes and they do big fat weddings. Demand is very high. They are the average number of per wedding and average destination wedding numbers, but the average of all 10 million weddings. So if you go by the bigger one, big fat weddings, the numbers are very high, and the better figures we get from those big fat weddings, and the numbers are very good. We do the best weddings also. We don't do weddings, we supply our products. So industry is very good, and the growth and the number of weddings are growing. The people have started spending more and more money into this. So this wedding industry is in itself is very big market. Their added, this is the main our registered office, and then Captify is our partner. Thank you. We can have question answers.
Thank you, sir. We'll take the first question from Agastya. Agastya, you can go ahead.
Hi, am I audible?
Yes, Agastya, I can hear you. Hi.
Thank you very much, Vinay. Thank you very much, Manishji. Manishji, my question was about the margins, and you touched about it towards the end, that once you grow, then you have to share certain profits with the supply chain and various, like probably even the customers. So I was just wondering, sir, how should we look at the first of all the variations that we see inside a particular year within a year? Because H1 versus H2, there was a 2000 percentage point difference. Sorry, not 2000, 20 percentage point difference in the gross margins. And even YOY comparison, there is a substantial decline in gross margins. So first of all, sir, is there a level to which we are like approaching and where we will stabilize? And is there any chance that once the like slowly and steadily our B2C is also improving? So I would imagine that our margins should improve because of that trigger. So how will these two dynamics play out, sir?
Yeah, you are absolutely correct. So first is like H1 is there, H1. See, there could be combination. We have different kind of price level and different kind of customers. So like one is franchisee, other is branch, third is wholesale customer, then there are event guys are there, decorators are there, and the retail shops are there. So
Hmm.
each level have different volume and different price levels. So our margins can vary based on the product, the sale mix of these people. So H1, this H1, what you can see the high GP could be result of that, where B2C turnover is more. In fact, one or two big fat weddings were there. I remember even one.
Hmm.
But to be
Hmm.
fair, it was Reliance. So there was huge supply
Right.
in April, May.
Right. Right.
So
Understood.
that could generate the higher GP. But average, you can see that GP is around 50%. And around GP is around 50%, which may not be very high, but should not go down, because we are compensating that with our own production. So
right.
production also have extra margin. But
Right.
yes, as you highlighted the sharing, like we are opening franchisee, so it cannot be at the same margin levels because
Mm-hmm.
franchisee is doing more of our part. They are storing goods, they are selling, they are doing the regional sales. So somewhere we have to share our margin. So that level, that reason the margin may come down because the turnover is also increasing. As I said, 32 to 59 is not easy numbers. So you can
Mm.
have the same numbers, same margin levels, and they keep on increasing like this. Average growth is okay, 30-40% you are doing, you can manage at the same margin levels. But if you go like this, then you have to be a little bit, you have to share those margin levels. Then only you can grow faster. But
Understood.
yes,
So,
it will not go
Manishi,
down
should
too
we?
much. It will not go down too much. We are maintaining, we are keeping track on that margin. So that it's not we are increasing just the top line and the margin levels are going down. That will not happen. Yes, sir.
So, Manishi, what we saw in H2, should we stick to those margin assumptions going forward? Roughly 28% EBITDA margins and roughly 50% gross margins. Is that a good assumption, sir, for the future?
Approximately 5-10% plus minus, yes.
5-10% plus minus.
Yes,
Okay,
that's why I say
understood,
we
sir.
are tracking these margins. Not we are not tracking and we have left as free flow. So we are tracking everything. It's not ki will just increase the top line or whatever is the pad. No, no. We have to be overall 5-10%, 20% could be there, but will not change more than this. We have to track this.
Understood. Sir, second, based on my, like, I can see that the net block has jumped a lot, so that capex is over, but still the CWIP number of 7 crores is there in the balance sheet. So, what is the capex plan for the coming 2 years, and where do you see? My estimate is that your gross block is now somewhere between 20 and 25 crores. So, what kind of revenue can this gross block generate now?
See, one, we have started making our own factory, which is around 200,000 square feet space. So part
Right.
of that already we have started. We have shifted our production there, and for the warehousing, assembling, other part is being constructed, which should be ready in 3-4 months. So that is
Mm,
one. So we need everywhere for any growth. So we have to have more space because this is voluminous product. It takes lots of space.
mm,
For that space, we need more space, and for
mm,
doing more production also, we need more capex. We need more space. We need. So
mm.
we are trying to triple this, make this triple as of now to take care of our 5 years down the line requirement. But yes, it may not be like defined month wise or the quarter wise. This year we are planning to make the production capacity double. And
Okay.
maybe next 2-3 years, maybe it could be triple. So little difficult to define month wise, but yes, we are trying to develop or increase more and more in-house capacity so that we can replace imports. We can have our own new products. We can give customers new products and additional requirements we can fulfill.
So is there a capex number in your mind for the year?
See
5,
this.
10 crores, sir?
See, this year should be around 20 because it's like
20
part is completed, part will complete. So average, I'll say, weighted average could be around 20 crores additional capex this year.
additional capex. Okay, okay, sir.
The building
And
is
so
also
would you,
being constructed. It's a big one. So we can save on rentals. We can
uh,
save on good rentals. Like if you see, if full structure, we can utilize the rentals could be around 5 CR per annum. The saving of rental.
understood. Understood. One final question on the working capital, sir. You have improved slightly this year as a percentage of sales.
Thank you, sir. You are the first person to say that.
Yeah, it's still, sir, it looks elevated, but compared to last year, both receivables and inventories have reduced as a percentage of sales. So what led to this? And any other triggers that you have, levers that you can pull so that you can further reduce working capital requirements?
Yes, two things. One, we always believed, and we say that the numbers will not increase proportionately. It will increase, but it won't be proportion of the top line, the
Right,
inventory and the receivable. It will not increase in the same proportion of the growth. So
right,
because we can have multiple uses, like production is also giving us good advantage. So that way it
right.
will increase, but not proportionately. That's what you can see in this year, right?
So this will continue going forward, slight improvements in working capital.
Improvement. Yeah, we are trying our best to improve this ratio. We bring down this ratio. So
Right,
it will increase, not increase proportionate. And what in between lies, it means that our best try we are doing it. We cannot define again, but we are trying
right.
our best to, it should be reverse. It should not be the same proportion.
Perfect, sir. So thank you very much for answering my question, sir. I'll move back in the queue. Thank you.
Thank you,
All
sir.
the best, sir.
Thank you, sir.
Thank you, Agastya. We'll take the next question from the line of Mr. Ajay Desai. Ajay, you can go ahead, please.
Thank you for the opportunity. Am I audible?
Yes, Ajay. Hi, good afternoon.
Yes, good afternoon, sir. So I have few questions. Your growth has been quite impressive on year-on-year basis, like more than 67 in standalone and 80% on console basis. So then, why are you giving such a soft guidance for FY26? So since our capacity is also going up manifold.
See, it's good from your part. See, making anything documented because the construction and the capacity is getting increased, not increased. So until it's increased, it won't be fair from our part to have more and more bigger numbers. So if we have a lower number and we achieve bigger, so that is good always from our side. But otherwise, it won't look good. So we are being conservative in terms of placing the number. But yes, business-wise, we are trying our best and we are very aggressive. So that's the
Yeah.
reason we feel to have these numbers. And these are the
Yeah.
numbers we are maintaining since last few years. So we don't want to just change, but whatever we achieve, that is up to that is available to you to see and to verify.
Okay. And how do you plan to increase your capacity utilization this year and maybe next year?
So this year we are trying to double it up from whatever was there, and then next year maybe next 2 year, 3 year, the triple than whatever we have right now. So I already said by increasing the machines level, by increasing the space, by increasing the production level, production capacity, and we have already started construction. So this will give us good push. Part of this would be replacement of import, and part of would be new requirement, new availability for the new supplies. Like as I said, for export we are trying to do only our make INM India make products. We are not getting into import and export.
Okay. Okay. Correct. And as you become bigger, do you think you will be in a better position to negotiate with large B2B customers or buyers?
We already started. I said also like home center and all also getting interested, and Dubai, UAE, Dubai also we are like home Saras and all. We are in discussion with them. They are already almost they have placed the order, so we are waiting on final PO and all. So yes, we more and more structure. See, you know this industry hardly there are any people who are structured, who are organized and having this kind of setup. So we are making our setup so that future will be very good and we could do from all sides, whether it's online, offline, decor showroom, B2B, even this departmental stores and all also will cater. So we are going in that direction to cater to everything related to our products. Yes, sir.
Okay. Okay. And where do you see your margins? Will it improve? Since
Margin in terms of numbers, yes. In terms of percentage, we don't see it will increase too much because see, taking this kind of sale, increase turnover, it won't be easy to improve percentage. But yes, volumes numbers is there. You can see last year PAT was 8 crores, now it's 12 crores. Same the numbers in GP or anywhere you see that will increase.
but won't operating leverage play out for you?
Sorry.
Won't operating leverage will play out for you?
See, operating level, we can try our best, but I don't see it would result in the very good gross margin.
And why is that so?
No, sir, I think what he's trying to ask is, will not operating leverage play out for you in terms of higher margins with more turnover?
Yes, that's what I'm saying. Hello.
Hello. Yeah.
Yeah,
Okay.
yeah.
Thank you.
Thank you. Abhinay?
We'll take the next question from Vipul Lamba. Vipul, you can unmute and go ahead, please.
Yeah, yeah. Thanks for taking my question. So, sir, first question in continuation to the margin. See, how much is the difference in terms of from trading versus our manufacturing margin?
Around 15-20%.
So, as our volume, our volume of manufacturing keep increasing. I'm not talking about increasing margin. Isn't it? I mean, we're being conservative on this, saying that our margin may be 5-10% because we're getting a significant portion of increase by shifting a lot of trading to manufacturing.
Yes.
So doesn't it, at least the current margin will sustain, or no, there is a possibility of some reduction in it?
See, we are trying to maintain the margin level, but yes, by the level of growth we are doing.
Hmm.
So as I said before also, we have to share some margin, like we have opened franchise, we have to share something with them. So we cannot give that the same price which we are giving to the existing distributor or the wholesaler. So that way, but they are giving us more return. So like if I can sell 10 crores for Rajasthan by sitting here, they can sell 15 crores. So in terms of number, it will be more, but the
Hmm.
margin would be less. So if you say, if we are making 2 crores now, so we'll make 3 crores. But the margin level could be different. Overall amount could be more. So you cannot keep on increasing margin with the higher or aggressive sales.
Got it. Got it. Sir, as we are expanding, our working capital, considering the business requires a lot of working capital. So, by when? I mean, do you think that we'll be cash flow positive? As of now, it's being negative for past couple of years and current year as well. One second, do we need further capital in coming future to meet our, say, capex requirement, or the growth, or we will be able to generate positive cash and internal accruals will help us?
See, we are trying to, we are working on this cash flow. Internal accruals are already happening and we are adding to our requirements in terms of working capital, in terms of capex also. But yes, the way the market is responding and the way the market need high and high, the demands are very high and the requirement is also very high. The more and more fund we put into this, we'll get better results, better top line, better supply, better margin. So, but yes, we are not getting very aggressive on getting fund and putting into this. We are planning our thing, and as per requirement, we are putting funds so that we get control growth. It's not key we are doing anything. So that's why we are able to manage the margin levels, and we have to put money as per requirement. We are planning properly. We have got into this factory. Obviously, the result will come after 3 years, 4 years, but this will give us result in within 4 years, 5 years, and the cash flow should be, I think, control in 1 or 2 years. It won't take much time. So we are whatever we are planning for next 5 years. So we'll be well settled in this period, and then again we'll be ready for the next level of growth after that.
Mm. So, sir, how this, when you say that some bit of is a retail business and the other is a wedding business with through dealer distribution, how, when we say retail, is it like a person who is a maybe a wife, a household, or a normal person? Is it walk-in, or it's through your exhibitions? How does it work?
No, retail is very small part, which now we are planning to do through our franchises. We are not, we don't want to do directly. Retail is like event person and the decorator who buys directly. So margin levels are also good with that. The others are like franchisee and the wholesaler who are kind of reseller. They sell to other people. And retail could be also home decor shop and all, not the end client. End client terms of home decor. For wedding, end clients are decorator only because they use the product. We cannot count on
Mm.
families or the who are getting married. So we don't count them as a retail customer.
Retail.
Decorators are our end customer for wedding supplies, and for retail for other products like home decor shop and all this. Even
Understood. So it is
for
purely B2B only. So sir, is there any plan to get into B2C in terms of, see, because there is a white space here in terms of there is no brand as such in artificial flowers, but in the B2C segment also there is a lot of demand for home decor and all that. I mean, getting into, say, smaller stores, and whereby you can get into retailing. Any plans, any thoughts on this? I
It's
was just
there.
thinking
I
about.
already explained. I can explain again. We have done tie-up with franchisee India. So only
Mm.
for B2C. So they'll be helping us to open B2C store across India. So coming year from this year, we can expect 10 to 20 stores pan India, and we'll keep on adding every year. So there will be home decor store which are catering to the individual requirements, and the bulk retail like you mall decor or the airports or any other stores. So that we'll start opening maybe 2 month, 3 month down the line. We can see these stores coming up in and more B2C stores. So that is already there. We have already signed the agreement with franchisee India.
Okay, and we have built on a structure that how do we, what is the space requirement, what is
Everything
uh,
is there. The whole structure is there.
structure. So you're saying then now we'll start into
We,
B2C.
we
Right
will
now
start
we
and roll out
primarily,
anytime now, sir. Everything is there. What size, what investment, what ROI, everything is there. Because franchisee India, if you've heard, is a very matured
yeah,
company,
yeah,
very old company.
yeah,
So
yeah.
they made us ready in terms of infrastructure for B2C, and then they'll help us getting those franchises. B2B, we are doing at our own because these are like wholesale and these are one time, and pan India it would be around 50, 20 stores. So that we are managing at our own, but B2C would be through franchise India. So all the stores would be through them. Even if we get some lead, we'll route through them. So that is
Got
their
it.
answer.
Got it. One last question. How when you talked about Walmart, home centers, and all these big retail chains, I mean worldwide, JCPenney and all, have we ever supplied to them in past, or is this is the first? This is at the inquiry stage only, or is there some work happening right now also?
Similar, yes, we have supplied before, similar, not at the same level, but yes, but now we have changed. See, now we have, earlier it was like imported products. So even they can import, they can buy the immediate requirement or temporary requirement. So now it's full-fledged. Now we can customize products, colors for them. So they also need something unique and something customized, which is not available at other stores. So now we are getting into those, which yes, we will start getting orders now. Export order anyway, we started getting, and local level also from this big brand will start anytime now.
Got it. And how has been your Dubai response, which we opened last year? How has been the response for from that market?
Dubai market anyway is very good because again this is like good for destination wedding and local also they have so many, even the sex weddings are also very high and big levels. So we are able to get good sales, plus we are getting many countries attached to our Dubai showroom. So Middle East, I think we are catering right now 15 to 20, 15 countries approximately now. Volume could be small or big, but 15 countries we are catering now. So idea is to cover whole Middle East and few South African, few African countries. So Dubai is doing good, and we have lots of expectation from Dubai, and
But
so it's good.
one last, sir. When we say 35 to 40% kind of growth, it's only top line, or at least in from a bottom line in the pure play, not margin, pure play number perspective, we'll be able to get that right.
Yes, sir. May not be same percentage, but yes, has to be there.
Now, I'm saying when we say 35% for 30 to 40% growth, top line along with top line, bottom line will grow in the, at least from a growth standpoint, the percentage would remain like from 8 to 12 we've reached. Now next year, say 35, 40 bottom line percentage increase would be there in the similar line. Even the margin is may not remain the same, which you explained, but the total number will
The
remain right
number has
with the
to be
growth.
has to increase. Otherwise, there's no meaning of doing extra top line or extra numbers. Number has to increase. There is no doubt in that. Only I said ki margin percentage may not increase or may not be maintained, but number has to increase, and it will be proportionately. It won't be like just like that ki that the turnover is increasing 100% and that the percentage numbers will increase 25%. It has to be in proportion. There could be slight change, plus or minus both ways, but cannot be big change in that.
Got it. All the best, sir. Thank you.
Thank you, sir. Thank you.
Thank you, Vipul. I request all the participants to please limit yourself to two questions. We'll take the next question from Raja Panda. Raja, you can go ahead, please.
Yes, sir. Hi, congratulations on good numbers.
Thank you.
My first question is, sir, what is the market size, Indian market size, and what is the import percentage versus domestic production in our market? And are there any domestic competitors for your product? If yes, like if you can name few.
See, market size is very big. As we have seen on numbers also, wedding industry is very, very big. It was like, I think, uh, six, I'll check the numbers. It was around 550,000 crores last year. And this year also it will add. But this is wedding industry. So our part is very small of that because that includes the fooding, catering, decor, hotel, traveling, everything includes. So that way our percentage is also very high. Last year our percentage decor industry was around 50,000 crores. 50,000 crores. Again, decor industry includes many things. Designing is there, the artist is there, the labor is there, the material is there. So that's how decor industry was last year, and this year also we can see good growth. You can always link this our growth to the wedding. You can see the wedding number of weddings, growth in number of weddings, and then growth in average spending capacity or spending in wedding. So that way you can link our growth. And the second question was, sorry, I just missed that.
I asked like, what is the import versus domestic production of our products?
So we have for our own requirement of like goods.
Yeah,
So
that is given in slides.
yeah. So it was around 32%. Now we are adding more and more percent so that we can make more and more at our place. 5 years during the next 5 years, maybe we'll be making around 95%, and we'll importing 5 to 10%. That is our scope. We don't have competition here in India. Small one or two factories are there who would be like 10 or 5% of what we are doing. And in terms of percentage, yes, whatever we are making, that is there. Otherwise, everything else is import
Right.
for us and for
Sir,
others.
Yeah, so we are tripling our capacity and we produced like roughly 24 crores worth of products from our factory last year. So roughly 72 crores is what we can achieve from this manufacturing facility that you are setting up. Is that right?
Almost, yes.
Yeah, thank you. That's it from my side.
Thank you, sir. Thank you.
Thank you, Raja. We'll take the next question from Majid Ahmad. Majid, you can unmute and go ahead, please.
Audible, sir?
Hi, good
Yes.
afternoon, Mr. Majid.
Yes, sir. Very good set of results, sir. Congratulations. Sir, my first question, sir, that is how, like, as you're entering the Dubai market and looking to scale there, there's also a big player named Black Tulip Flowers. So compared to them, how do you see with them, with that player who is a very large player in the Middle East market, and seeing the multiple unorganized players there? How are you looking to scale? Like, any sort of insight you can give me on the market?
Sir, black tulip is into fresh flower, we are into artificial flowers. A big change. Even black tulip is very good customers in Dubai and India. Also, they are referring very good clients to us. So this black tulip is helping us to increase our top line.
Okay. Your customer, your like they're your customers. Black
Yes,
Tulip
yes,
is.
sir. In Dubai as well as in India, they are good customers. And they are into fresh flowers. They do very less of artificial flowers. They are supporting us to increase this top line for artificial flowers and related products.
Got it, sir. Sir, post this new capex that you're doing, that new capacity expansion that you're looking post like October 2025, you're looking for expansion. Post that, how much is your manufactured versus the traded goods mix? How much you're looking? If you
Yeah,
can,
we
like, is it
discussed
like
it two,
50?
three times. I can just explain to you in brief. So 32% is there right now. So we are trying to double it this year and triple it in next 2, 3 years.
So by which the manufacturing will, the traded will decrease proportionally.
Yes,
Right?
we are trying our best to reach 90% own production and 10% import by next 5 years.
Okay, that's what I'm looking at. Okay, by which how much gross margin you're looking at by having more and more.
So gross margin looking is the best one, whatever possible. 80, 90% also we are happy. But right now its average is coming around 50%. So we are trying to maintain around this percentage. And rest we don't see a big increase in this percentage, but yes, we're trying to maintain at this level.
Okay, so got it. Sir. So finally, on like it's a similar question, but regarding working capital going forward, as we are going for higher growth, and as we scale, we would require more inventory, and at times you are in B2B segment, we need more receivables as well. So how are you going to scale? Are you going to take more debt, or are you looking for another equity fundraise to support such high growth in terms
See,
of working?
our financial directors are keep on working on this, and but yes, we'll take as per requirement and whatever suits based to the company, the combo of equity debt or equity. So based on suitability and based on requirement, we'll keep trying to take. That's how we can expand and we can do extra expansion in our business.
Lastly, just one more point on this mix. Like we're saying, there's a mix between artificial and other products as a total mix. How much you're looking to see in next 2 to 3 years? Artificial.
Sorry?
Sir, if I see your overall revenue breakup, artificial flowers, artificial plants and leaves, and decorative, right? These three are the
Yes.
major ones. So going forward, how much you're looking in terms of mix? Like going
So
forward, will artificial
we are trying to carry everything together, and but yes, we are focusing on each and every category, and depends. Like artificial flower has to be there in bigger percentage, and we are adding more and more other products. So it's not that this artificial flower percentage, artificial flower sale will come down in terms of numbers. Maybe percentage mix could change, but almost we are trying our best to boost all these 4 5 categories. So we don't have any plan to reduce one and increase one.
Okay, sir.
Thank you.
All
Thank you,
those.
Majid.
Yes.
Thank you, Majid. We'll take the next question from the line of Chaitanya Gadia. Chaitanya, you can unmute and go ahead, please.
Hi, Manish ji. Are we, like our products, I understand maybe the raw material, is it plastic and are we doing like any recycled mixing in it or anything sustainable? That is my first question. Secondly, in inventory, I understand being the nature of the business, we need a lot of inventory days and inventory to be kept. So if in inventory aging, which are getting too old, are we like, can we reuse them or melt them and get back to a new form? So these are my two questions, please.
See, first is yes, we are using plastic as well as fabric, which is anyway polymer. So whatever you are using, most of the raw material is based on made from polymer, and these are all are recyclable. Nothing is going to happen. Like sometime we get in the market that artificial flowers are going to be banned and this. So those we discuss in the market is that film-based artificial flowers like marigold, which we are not into. All our products are recyclable. There is no wastage permanently, and second is this all these products are recyclable. The mix is always the mix is there, which could be combo of plastic and fabric, and there are other products also required for the wires and all those products are there. So mix is there, and there is no no hazardous or no issue. Even our factory is also in a green zone, so there is nothing such which can create or trouble market or environment.
Right. The second question is the inventory days. So, if you're following inventory aging and some products are really not moving, then what do you do of them?
See, most of our inventory is having regular products. Only the issue is we maintain many colors. So many
Right.
colors makes our inventory high because demands and the products, the requirement of our customers is not fixed. And what they need is not very clear. The market is not organized.
Right.
So 90-95% our inventory is running products, and because the demand is high of the same product, same color, same quantity, and whatever if something is there, we can sell it off. There is no issue. We can use it. We can uninstall and then we can reassemble those products. So almost zero wastage is there in our products. These are non-perishable products, and we have huge market, all kind of market. We have production capacity. We can reassemble, we can open, we can use. Otherwise, we can make different products from that, or sometimes we can give some discount and clear those products, which are anyway very less in terms of percentage. So we don't have any wastage.
Okay. Thank you, sir.
Thank you.
Thank you, Chaitanya. We'll take the next question from the line of Sahil. Sahil, you can unmute and go ahead, please.
Am I audible?
Yes, I can hear you, Saila.
Thank you, sir, for the opportunity. Sir, one question that I had that in India we see that there is seasonality effect in H2 being the primary season for such decorative things. Is there something similar in Dubai as well?
Yes, Dubai is more like this. April to September is very dull season there due to heat. So there Dubai is mostly between October to March. But sometimes we get pushed in this dull season also because sometimes resellers buy and they prepare the goods, they prepare the decor, they prepare their own designs. So otherwise, yes, but this 6 months are dull season there.
So that's what I'm trying to understand, that how are we mitigating this seasonality effect? Uh,
We
Anything on
cannot
that?
mitigate this. We can just try based on the requirement. Like this mitigation has to come from the customer side, from the wedding side, like the NRI's wedding, the destination wedding, and then sometime like people are doing out of dates also these weddings, and other decor is happening. So those can result into mitigation, but we don't have anything in our hand to mitigate this.
All right, sir. And one thing on that in-house production. substitution. By when can we see that in full force, the import substitution?
By next 5 years, within next 5 years, we can achieve 90% own production and 10% import.
And for current year, what's the target?
We are trying to double it up.
Double it up from FY25.
Existing, yes.
All right, sir. Those are my questions. Thank you.
Thank you, sir.
Thank you, Sahil. We'll take the next question from the line of Ruchit Shah. Ruchit, you can unmute and go ahead, please.
Sure. Hi, Manish bhai. First of all, congratulations on the continued growth and success in how we are progressing forward.
Thank you.
And
Thank you very much.
So we had met. So I had met you through Captify earlier last year, December. One of the points that you had mentioned was that the company was looking to implement SAP. Has that been implemented?
Almost implemented. Almost. It's on go live, but still we are treating as a test run, but it's on go live. So it's there.
Okay. Okay. One of the points that has been mentioned in our annual report last year was that the artificial flowers perception in India is not great. Like a lot of people perceive that as a cheaper quality. And so I also happened to visit the store in Bombay. First of all, compliments on that as well. The store looked quite good. And even I heard a great feedback from Mike that the perception which we initially came with that artificial flowers was kind of changed, that okay, this is something good and can be looked at. So my question is that are we doing something proactively towards changing that perception, as in like kind of communicating from our end that our brand or the artificial flowers, considering that we are the major players in artificial flowers, are we doing anything proactively towards communicating that artificial flowers has high quality also?
Yeah. First, the first para of your discussion was like you created the question and you answered the question. So you only completed that one. Yes, market perception is very good because using fresh flower, which is like alternative, which was alternative, like earlier artificial flower was alternative, now we say fresh flower is alternative. So it's not easy. First, it's perishable. It's the required quantity as per this big fat wedding or good wedding is not available. Third is you don't get people to put on the right time because this cannot be installed 2, 3 days, 5 days in advance. You have to do at the site and sites are not readily available. So you don't get people, you don't get time, you don't get material. So that is giving advantage to artificial flowers. And now before it was like copy of fresh flower, like copy both the duplicate also we used to say and all. Now this has become part of decor. It's not that artificial flower, fresh flower ka replacement. It's a copy. It's a decor item, and people are happily using because it's adding more and more glow to the events, and there is no comparison now with the fresh flower. It's created very good market. Any wedding, I'll say any wedding you go, if you don't see artificial flower, you tell me. Something or the other, it could be less, it could be more, it has to be
Manish bhai,
there. I'll
Manish
give you
bhai,
one
I
more example.
agree.
I'll give you one more example. Even Jain wedding, they don't like fresh flower because they attract insects. They do 100% artificial flower weddings and the quality is improving. It's not ki the only the lower quality, only higher quality. All the qualities are available in the market. Even the demand is also there of high quality. We are getting high, better and better quality. We keep on checking globally where is what is sold. So I can say we selling best quality which is available globally, and there is nothing more than that which we are selling. Maybe volume or the quantity is less, but we are at par of best quality available in the world.
Manish bhai, I was just talking about like doing something from our side. So couple of other companies in wedding section, wedding category per se. So what a small example is that couple of companies are working with small niche micro influencers. I don't know if that is relevant here, and
So that is
probably
marketing. That is marketing. We are doing all kind of marketing through exhibitions, through our online, through digital platform. What are doing?
through
That's what I said.
Instagram as well.
The quality itself is attracting more and more leverage to the artificial flower market. And the plus the other things I told you, that the availability and the colors and the usage, these all are adding to the enhanced acceptance of artificial flowers. You can do marketing, but the marketing we do from the sales point of view. We don't do like you have the this diamond ka, you have the association with just market diamonds. They don't they don't market any particular company, because the association markets diamond. So we don't have such thing here, because getting people, getting response, getting funding for that is not easy. But yes, we try from all angle what we can do to promote sales. By doing promotion of sales, everything this whatever you say is happened during that one.
Okay.
Like you came to our showroom, you saw the products are good, artificial flower is good. Then you'll go, you'll talk to other people. So that is also one way of what you asked. Acceptance of our flowers, artificial flowers.
Okay. Manish bhai, so we still have quite a few of our raw materials which are imported from China. Is there a dependency on our from our suppliers, and is there in any case like a bottleneck or
Almost
that can?
nil dependency there. That's why we started production in India. So Reliance is big supplier of polymers, and Reliance is big supplier to us also. We buy from other place also. So dependency is almost negligible. Sometimes we import few machines, sometimes some material for testing purposes and all, but there is not big part of raw material which we import, and dependency is almost zero.
Okay.
That's why we will be able to export our own product made in India, and raw materials also we want to use whatever is available in India.
Okay. So one of the questions, I think it has been kind of addressed, but still, so we have a huge inventory, and I understand that it is a nature of our business that we want to display a lot of our products. It's just as we grow, will it still continue to remain capital intensive, and as we require more and more inventory, and in turn, will our cash flows also be blocked a lot more in inventory or tied up in our inventory only, or can we going forward, how would our cash flows be?
See,
If you could
cash
just
flow will
elaborate.
improve and it will become positive. That is one. The second is inventory. As I said many a times, inventory will not grow in the same proportion. It will grow. Basically, if the top line will grow, it will grow, but not the same proportion. We can see, you can compare from last year to this year. So we are
Okay.
trying our best to reduce the inventory as much as possible, but at the same time we are not stopping increase of inventory, so that our top line is not getting affected. We cannot maintain the same increased top line with the same inventory. That is for sure. But yes,
Okay.
the ratio we are trying to keep it lower side.
And do you expect like the cash flows to be positive within this year, next year?
We are trying our best, sir.
Okay. Okay, great. So I have a couple of more questions. If it's okay, I'll continue or I'll get back in the queue.
That captive I will.
Yeah, first for Captify.
Since we are just running out of time, you
One
can
last
just
question.
push it. Yeah, sure, sure.
Okay. So Manish bhai, I think we are spending on, we are putting in some efforts towards events, and we are spending some time for international events also. So how's the response towards, and also franchising? Like how's the response towards that apart from Dubai also?
We're getting good response. We got so many leads. We got orders also from Denmark, Portugal, and all. So very good response. We are again going back to Frankfurt, Germany exhibition next year, and with the bigger space, whatever we had last year, we are getting into bigger space. So we are expecting more leads, more orders.
Those leads are converting into orders. I mean,
Already we
was the
got
question.
advance, sir. We got USD into India.
Okay, as well as the franchisee model is kind of rolling already. It's not
Yes.
just into planning stage.
Yes, sir. Yes, sir.
Okay, okay. Thank you. I'll just come back in the queue. Thank you.
Thank you. We'll take one last question from Mr. Vipul Lamba. Vipul, you can unmute and go ahead, please.
Sir, one aspect, by whenever we talk about it, looks like we are primarily more focused on the wedding industry. However, there is a large market within India also on the home decor. uh, Other than franchise, other than any other focused efforts we are making, because that will lead us to remove that your dependence on the second half of the year, that will, because this industry of home decor is a evergreen, it's not seasonal. So how are we focusing, because that's also a large market.
Yeah, we discussed. We discussed it again. I'll explain. Like if you remember, we take name of home center and all here. and Home Saran in Dubai. So these are all big players which will start supplying now. This
So
is just an example.
other than home center, even see is a large market on say architects
That is through
or
BTC, B2C, that we are opening stores, retail stores. They will cater to all these local requirements.
okay.
And e-com is also there. E-com also we are extending day by day. And plus this big players have very huge numbers. Even these exhibitions, I got one company from Germany, they have 500 stores. Like that, so many people are there and everybody is interested in Indian products now. We're just working as per their requirement. So they we huge scope and this Germany fair is only for home decor. This is not for wedding. This is home
Got it, sir.
decor. So we are trying our best to balance both. Obviously, we are very happy with the wedding one, but home decor also we have product, we have process, we have branding, everything is there. So example is Germany fair is only home decor. It's nothing to do with wedding.
Okay. And on do we get similar kind of exhibition for domestic also?
Yeah, we keep on participating domestic. All kind. HGH is there in July. That is again home decor. In Bombay, it's there from 2nd to 4th July. If you can visit our stall. So that is again for home decor.
Got it, sir. Thank you.
Thank you, sir.
Thank you, Mr. Vipul. Manish sir, would you like to give any closing comment before we end this conference call?
Okay. Yeah, thank you very much. We also, even I also get to learn so many things by getting into interacting with you guys. And I request the company is doing good. We need your support and your ideas. You can always share your ideas, your support or your expertise. And we are looking good future for the company and for the market as well. Wedding and other home decor both are very good markets, doing very good. No need to any verification. You see yourself surrounding you and you can realize. So we are doing best, trying our best from all sides, and we are looking for your support to grow more and guidance. You can guide us anytime. Thank you very much. Thank you.
Thank you, sir. Thank you for giving us your time. Thank you to all the participants for joining us on the call. This brings us to the end of today's conference call. You may all disconnect now. Thank you.
Thank you, Team Captify. Thank you, Vinay.